Hello everyone, I hope you are having an amazing day. Today we're speaking about dividend. I'm going to explain you everything about it. So just sit back, enjoy, take a cup of tea like I am in my beautiful Canadian mug. It smells so good. So without any further ado, let's go. I bet that you like money, and well, if you don't like money, that's fine, but I don't want you to be frustrated when you receive your first dividend payment. Wait, you don't know what's a dividend? Perfect, because I'm here to explain you what it is. Okay, so a dividend is a payment that you get from a company when you are holding their shares. That's simple. I know, that's it. Now, let's say that you invested into a company and they make profit. Well, first of all, congrats, that's exactly what you're supposed to do and what the company is supposed to do, make money, right? That's good. Now, this company has two ways, pretty much, of using the money. The first one being that they can reinvest all this money into their business, buy new machines, hire new people, or lie about the new technology that they are making. Or the second option is that they can send some of the profit to shareholders in the form of dividends. So the way it works is that they will take a part of the profits, or even all the profits in some cases, and give it back to shareholders. It's kind of a way for them to reward you for holding onto their stock and investing into them. So do all companies pay a dividend? Of course not. Because that makes sense, right? A company has to make profit in order to pay dividends. So if a company is not even profitable yet, that would be crazy to pay a dividend. Most of the time, a company that pays dividend is already well established, has been here for a long time, and has a flourishing business that is still growing. But of course, this company will not grow as fast as a new company, because if they pay a dividend, it means that they have less money to reinvest into their business, as like a new company will have everything for themselves. So you won't get a massive share price return when you invest into dividend stocks, but on the other hand, you get this sweet and stable dividend payment, which is great. And that's why most of the time, new companies don't pay dividends. Now, when you look at the statistics of a company, you can find a percentage that's called a yield. This yield is representing how much money you will get back each year when you invest into this company, and that's called actually a dividend yield. And of course, it varies a lot depending on a lot of other things, like what type of company are you investing in, how much profit do they make, etc, etc. Let's take an example. Of course, I'm gonna take the best one, Apple, with a 0.7% dividend yield. As all the big tech sector companies, pretty much, they have a really small dividend yield. Why? I don't really know why, but they all have a low dividend yield. That means that Apple will pay you 0.7% of the money that you invested into the stock each year that's going back to you in form of cash. Over time, the yield will actually change because the stock price is actually changing itself. So if you have a 0.7% dividend at $100 per share, it will go to $0.35 if it's $200 a share. So the dividend yield is pretty much an amount of money that you'll get, not really a percentage that you'll get from this share every time, because if it stays 0.7% and the stock price goes to $200, well, you literally get paid the double, even though that's not what they are trying to do. And also you have to know that a company at any point in time can increase the dividend or decrease the dividend, even cut it all the way if they want to. Now, let's compare this yield of 0.7% from Apple to the yield of AT&T, which is 7.75%. So as you can tell, it's varying a lot depending on the companies, can go to a lot to a really low amount. And at the end of the day, it all comes down to risk management, because the higher the yield, the higher the risk. They are paying more money to shareholders, they're taking more money from their profits. So you have to find a yield that is pretty good for your risk management. For myself, I started at a 4% yield, which is kind of in the middle of like not too risky and not too safe, so that's pretty good. Now, a question that you probably have is, when are you getting paid? Because that's what we want to know, right? Well, yes, and actually in most cases it's 4 times a year. Yes, a quarterly payment is what you will mostly see in all the companies that pay a dividend. But of course, if there's a rule, there's always exceptions to the rule, and you have some companies that will pay you twice a year, some will pay you once a year, that's pretty rare, and also in some rare occasions you also have companies that pay you monthly. That's pretty cool, you can compare that to a salary pretty much. Now, all the companies that pay a dividend will all have their own times in which they pay the dividend, which means that if you hold a lot of dividend stocks, you can actually get paid every single day. And it always feels nice when you wake up in the morning and you see that you earned $3 while you were sleeping. Okay, now there are a few ways that you can invest into dividend stocks. The first one is just dividend stock investing. That's pretty much the easiest one, but the way it works is that every single time you get paid a dividend, let's say that's 4 times a year, like I said before, well, you just take it and reinvest it into the company that paid you in the first place, or into another company that also paid a dividend. This way, every single time that you're getting paid a dividend, it will be a little bit bigger every single time, since you reinvested the dividend into it, and well, you're just getting a bigger percentage pretty much. This way you can actually see an exponential growth of income when it comes to dividend payments over time, and that's amazing, and it's called compound interest. I made some videos about this if you want to go and check out the channel. And the second way of doing it is actually to invest into what's called dividend growth stocks. The way it works is a little bit different because what you do pretty much is that you're not really looking at the yield, but you know that in the future this company will do amazing, and this way you invest into them when they already pay, like let's say Apple with the 0.7% dividend, and then you know in the future they'll do great and that they will continue to grow this dividend over time because they're making more money. And that's a great thing to do because you invest into companies that can have a high share price increase and also increase the dividend over time, which means that you also see an exponential growth of income, and if you even reinvest these dividends, well, you're set for the future, man. So as said in the title, is it possible to live off dividends? Well, to figure this out, we need to know how much money do we need to live pretty much our daily life. Now, let's say that you need $50,000 a year to live. Of course, you need to live a little bit frugally, but you know, that's always good to do. The average dividend is between 3 to 4%, so let's say you invested into dividend that pays a 4% dividend. That means that you need $1,250,000 invested into the market with a 4% dividend yield that will give you $50,000 each year. That's a lot, I know, but this channel is here for you, man. Pretty much every single time that you're getting paid, set an allocation of this salary that will go immediately into dividends, and over time you'll see an amazing result. The more money you can invest, the more money you will make at the end of the day. And you know what? There are already thousands and thousands of people that live off dividends in the world. And if you can reach this point in life where you are so wealthy and you're getting paid so much passive income with dividends that you can literally live off of it, it means that you reached what's called financial independence. By the way, guys, check out the channel of Finance with Xenakai, link in the description down below. She speaks a lot about financial independence and retiring early, so go and check it out. So yes, you can actually live off dividends, but there are so many other ways actually to get paid while you're sleeping. So if you are interested into passive income and investment, go and check out this video about how to start investing for beginners, or this video about how to get passive income in a monthly basis. Of course, subscribe to the channel if you want to see more content about all of this, and I see you guys in the next one. Bye bye.